The coronavirus outbreak in China has already killed over 100 people, which must be devastating for the people involved. But in the past, there have been pandemics which have been orders of magnitude worse. So I thought in this video we'd look a little bit at the biology of the coronavirus, but also look at previous episodes to see how bad they've been and what impact they've had on the global economy. So let's look at that in a bit more detail. This is not a recommendation. If you want advice tailored to your specific circumstances, seek independent financial advice. Now, the focus of this video is obviously on the market impact of the virus, but I think it's useful to understand the biology in order to understand those impacts. A critical distinction is between an epidemic and a pandemic. An epidemic is localized to a particular community, whereas a pandemic is worldwide. And of course, the market impact of a pandemic is much greater than an epidemic. Now, you've almost certainly had seasonal flu at some point in your life, but that's very different from pandemic flu. And this infographic from the US Center for Disease Control in the United States explains that distinction very clearly. Seasonal flu is a contagious respiratory illness caused by flu viruses which affect your respiratory tract. A flu pandemic is a global outbreak, and there's also some novelty involved. The virus is usually one which hasn't been seen before. Seasonal flu epidemics occur every year, whereas we've only had 4 pandemics over the last 100 years. Seasonal flu and pandemic flu are spread in the same way, through water droplets that are released when we cough, sneeze or talk within a radius of 6 feet of somebody else. The only difference is that people usually have less resistance to pandemic flu because of its novelty. Whereas there's a vaccine for seasonal flu, which you may receive at work or at school, there usually isn't a vaccine for pandemic flu. Later on in the outbreak, you may get pandemic flu vaccine. And if you do, you may need 2 doses of the vaccine in order to increase the likeliness that you're immune to the virus. Antiviral drugs provide some protection against seasonal flu, but during a pandemic, it's extremely likely that these will run out very quickly. And although seasonal flu isn't usually very serious, you can get complications if you're very old, very young, a pregnant woman, or someone with certain long-term medical conditions. Pandemics are different because sometimes healthy young adults are also at high risk of developing severe flu complications. This is also from the CDC, and it talks about influenza milestones over the last century. What really alerted the United States to the danger from influenza was a 1917 to 1919 outbreak, and this was a virus which is called H1N1. And this continued to circulate in the United States seasonally for 38 years following that initial outbreak. And we didn't even know that influenza was a virus until 1930. Since then, we've had several pandemics in 1957, 1968, and in 2009. And it was only in 2005 that the genome, that's the genetic sequence of the pandemic flu virus, was fully sequenced. This is what a flu virus looks like. This is actually called a virion, and in a strict sense it's not really alive at all. It is just a combination of proteins. Those are the stubbly bits which you can see on the surface of this sphere, and inside that outer sheath you can see the genetic material. The reason why the most recent outbreak was called a coronavirus is that under an electron microscope these knobbly surface proteins look a little bit like a crown, which is corona in Latin. Here's one of your body's cells, just to show how small a virus particle is in comparison. It's about 1,000 times smaller. And here are some virus particles under an electron microscope. This is how they actually look inside your body as they start to replicate. Now, if you're familiar with my videos, you'll have noticed that this looks a little bit like my Scooby-Doo tree, where I compared the correlation between different funds. But that's because my background was also in genetics, and for that I had to do some sequence analysis. What these trees let you do is see relationships between very large genes very quickly. So you can see there are 2 families of coronavirus. These are all called alpha coronavirus, and these are all called beta coronavirus. Notice how the coronavirus gene sequences are very similar, even though they're infecting different species. So here's mink, ferret, bat coronavirus. and these 4 human coronaviruses are responsible for many human colds and flus. In 2012, there was an outbreak of MERS, which is the Middle East Respiratory Syndrome, which originated in Saudi Arabia, and the genes responsible for the virus outbreak in Wuhan are shown here. Notice how they're very similar to a bat coronavirus, which is why people think that might have been the source of this outbreak. Now let's look at the equity market impact of previous flu outbreaks. The 2002 to 2004 SARS outbreak, where SARS stands for Severe Acute Respiratory Syndrome, occurred just after the big sell-off after the dot-com bubble burst. So you can see the S&P 500 fell from 1,500 all the way down to 800. And as the news flow evolved about the outbreak, the market impact was fairly limited. But this certainly wasn't a pandemic. This was just a localized outbreak. Unlike the current outbreak, it was focused in China, although there were deaths in other regions, such as in Canada. And you can also see that the entire episode was fairly short-lived. There was a much more severe outbreak of H1N1, which was related to the 1918 pandemic and which was more commonly called swine flu. And this occurred in 2009. Again, this occurred after a very severe market sell-off, which was due to the global financial crisis, and the S&P 500 fell from 1,300 all the way down to 700. And despite the severity, in other words the number of deaths, which rapidly increased over time, and the number of countries affected, which was just 34 in May 2009, and within a year that increased to 200 countries. But even so, the development of the disease had a fairly small impact on markets. Even when the World Health Organization declared the pandemic over in August 2010, markets didn't rally in response. I think what's different about the 2019 outbreak of this coronavirus is the nature of markets, because this time round what we've had is an extremely strong equity rally over the space of a decade. There were a few pauses on the way, and there was a setback in 2018, but markets are simply looking very richly valued. And it may be that if this is a severe outbreak, the impact on markets will be considerably bigger than we saw in the previous examples. The first patient was recorded in China at the beginning of December 2019, and the gene sequence of the virus was published just over a month later, and so far the number of deaths is fairly limited at the end of January in 2020, and the market impact has also been limited. Of course, the impact on the Chinese equity market is considerably bigger than on the US equity market. The US S&P 500 is shown here in blue, which is what we saw before, and the line in black is a Chinese CSI 300 index, where the impact is considerably greater. And it has to be said that the Chinese State Council announced on January the 27th that the Chinese Spring Festival holiday would be extended to February the 2nd all across China, and that was purely to contain the outbreak. The peak in the CSI 300 was on January the 13th, and if we look across all asset classes since then, using a variety of sterling-denominated UK Vanguard funds, the market which has sold off the most is the FTSE Emerging Market Equity Fund, which is dominated by Chinese equity. And generally, countries which depend most heavily on China economically are the ones which have sold off the most. So that's Asia Pacific, excluding Japan, which is dominated by Australia, but also some European markets such as Germany, which depend heavily on exports to China. Looking at the life strategy funds, the ones which have lost most are the ones with the highest equity component. So Life Strategy 100 lost 1.3%, whereas Life Strategy 20, which is 80% bonds, gained 1.3%. And the longest duration bonds are the ones which gain the most. And that's fairly typical when you get a fall in risk appetite in markets. And over that period, the S&P 500 has been fairly flat. In order to see how bad things can get, let's look at the example of that 1918 outbreak. This 2002 paper attempted to estimate exactly how many people died in that outbreak. Previous papers had put the estimate at 25 to 40 million people, but this paper revised that up to 50 million and said that it could in fact have been twice as big as that, or in other words 100 million deaths. To put that in context, the number of people that died directly as a consequence of World War I was just 16 million people. There were some precautions that people could take at the time, such as wearing masks, but really they had no protection against the virus. and it had a huge impact on society. This is from a US documentary series called The American Experience, and this man, Daniel Tonkel, remembers his father telling him that most of the employees at his father's shop were sick, and in fact nobody was left to run the store, and that of their 10 employees, 4 of them died over the space of a week or 10 days. So if the fatality rate gets too high, this might directly or indirectly impact infrastructure. So now let's look at the economic impacts of previous outbreaks. Here are 5 flu outbreaks, all of which have quite different severities, with that Spanish flu in 1918 definitely being the worst, and it also had the highest fatality rate of 2 to 3% of cases. Based on these precedents, we can rank pandemics according to their impact on GDP. A mild case, such as the 1968 pandemic, only removed 0.7% from GDP. A moderate pandemic, such as the 1958 one, would be enough to wipe out global growth almost completely, and a severe pandemic such as 1918 could push the entire global economy into recession. Because if you look at my 2020 outlook, you'll see that global economic growth is currently quite weak. In this World Bank report from 2013 by Olga Jonas, it's interesting that the biggest impact is due to people avoiding the flu. Mortality only accounts for 12% of the economic effects. Illness and absenteeism has a larger effect, but avoiding infection has by far the biggest effect. The reason why is due to the numbers. Obviously, if someone dies, their productivity falls to 0, but the actual number of deaths is fairly small. Illness and absenteeism affects a much larger group of people, and the largest group of people are those who are well, but who reduce economic demand by not travelling, not dining out, not going to hotels, avoiding any form of tourism, or other leisure services such as going to the theatre. So in order to gauge what's going to happen with this particular outbreak, here are the things to watch. It's probably a good idea to look at the CDC's website, but also that of the World Health Organization to see what the latest is on the fatality rate. If it's below 0.2%, this probably isn't such a severe outbreak, but if it's above 2%, then that could have a much larger impact. The incubation period of the virus is currently thought to be 2 weeks. And the Chinese government has said the virus is infectious before symptoms start to show. The CDC has questioned this. That could make it much harder to screen people to see whether they're unwell. And not being able to screen could mean the outbreak is much more severe. Currently it's localized to China, but the critical question is whether it's spreading quickly enough and widely enough to become a pandemic. Johns Hopkins University has this great visualization tool which allows you to track the spread of cases across the world. And what you can see is that it's still fairly localized to China. It certainly doesn't look like a pandemic yet, but the number of confirmed cases is growing very rapidly, and it's currently at over 6,000 patients. And in terms of its impact, does it go beyond the normal age groups for complications? In other words, are the mortality rates very high, not just for the very old and very young, or for those with severe illnesses, but for young, healthy, productive people? If so, the economic impact could be more severe. So at this point, it doesn't look like we've got a global pandemic on our hands, but it does seem as if it's starting to impact markets. So really what we have to watch are those key indicators to see how bad this problem is going to get. Because if it does become a pandemic, it has the possibility of impacting markets in a very meaningful way. But fortunately, the Chinese authorities have been very quick, firstly to release the genomic sequence of the virus, but also to restrict travel, and there's been a globally coordinated response in order to stop the virus from spreading. So hopefully this will not become a global pandemic. If you found that video useful, please do consider supporting us. For just $5 a month, you get access to all of our backlog of Sunday evening calls, you get to join us on Slack, and you get to see previews of videos such as this. So in order to do that, just click on the button and hopefully we'll see you on those Sunday evening calls. And as always, thank you for listening.